are talking with Eric Relph of CommStock Investments. Eric, one day after the WASDE report and the crop estimates, what are we looking at this market as we get ready to head into the main part of the trading day?
Well, I think the reality is you've got a lot of long profit for the week after yesterday's jump in the corn. So seeing a little ebb and flow in that market's not going to be any big surprise. And we're seeing that here coming out of the break, down 4 cents in December, 476.5 last trade. We closed right up at the top end of yesterday's range. So very strong market. And the yield number that we saw yesterday warrants that kind of reaction. And I think this is going to turn a corner here. I don't know when we'll see the realities of that derecho that moved through mostly Illinois and Indiana 2 nights ago. But whenever we see the assessment reports from that could kind of give us an indicator as to how much loss is going to be accrued because of it. That's going to be a little bit of another spur, and then we're going to be watching weather. But at the end of the day, I think it's going to be demand that really drives this market. And the old saying, demand markets need to be bought and supply markets need to be sold. I think it's going to be demand that takes the driver's seat moving forward, although the burst right now is due to the supply side. This is something that could develop into a story as time goes on. And of course, we're just going to have to kick back and wait and see how many months it takes to get this thing trading above $5 to sustain trade above $5. As we have December 27 trading right now at 495. It's pretty impressive stuff out there. So we'll see. We saw another 125,000 tons of soybeans sold to China announced on a daily flash sale this morning. The weekly sales of beans and corn, both very impressive. This is something that could continue, especially with the condition issues that China's been dealing with. And again, kind of hide and watch while wheat takes center stage because of the Russia-Ukraine conflict.
All right, and I guess, the big question I've been hearing asked here since the WASDE report came out and the crop estimates report came out, the question's been, where in the world did they find so many acres that they didn't know about last month or the month before?
Yeah, your guess is as good as mine. Of course, the USDA is going to fall under scrutiny no matter what they put out or when or how. But the acres is kind of mind-boggling. We didn't have the prevent plant acres like we did last year. It was a sharp decrease in prevent plant. So that's going to make up some of that ground, but not the kind of numbers that we saw reflected yesterday. And where that ground's being broke out of, I can't imagine. There's also been a lot of talk in some of the plains areas about more CRP ground going in. So that's not going to be conducive to additional row crop acreage. I really don't know, but it was a bit of a surprise to see that.
Yeah, that it was. I know people were like, I could tell you, if they found 3,000 acres or 30,000 acres, but was it 3 million acres is what they came up with?
Yeah.
So interesting amount of numbers. That's, that's almost a state, in some places.
Yeah,
but
yeah. I mean, how did we come up with like Delaware? I don't know.
Exactly. I mean, it just kind of popped out of nowhere. Looking at the livestock side of things, Eric, I know cattle has had quite a back and forth, very volatile last couple of weeks, and hogs have been kind of just quietly moving back and forth. What are we seeing as we head into this Thursday?
Further weakness after a big washout yesterday. I'm actually surprised to see $2 lower feeders here this morning, $1.50 lower in the live futures. The sentiment has definitely shifted. I could point to a few things, but I think first and foremost, if we are going to perceive that corn's going to be notably higher moving forward, then that's going to put pressure on feeders in the initial trade, which is what we're seeing right now. That's probably some of what we saw yesterday. I don't know that it warrants any follow through today. The cash market is struggling a little bit. We should see some special sales coming up here over the next few weeks. That could kind of boost things back up a little bit. Fed cattle cash appears that it's going to be several dollars lower this week after a couple of weeks of gains. We had the big washout in the cash market, and then we start clawing back. We gained a couple bucks last week, a couple bucks the week before that, and now we're going to give most of that back by the looks of it so far. It is Thursday. There's still time to trade this thing. We'll see how it ends up. But it looks like we're going to have $2-3 lower weighted average this week. And it's just general sentiment. Tyson earnings reported yesterday. They're expecting the beef sector to lose between 500 and 650 million for year 26. That's not going to be a good thing for the market because obviously they're gonna throttle back on the beef side of things if they continue to ratchet up those losses like what we're seeing right now, and everybody kind of takes note of that. So that's been a lot of this struggle in conjunction with the higher grain prices and the perception that those prices are going to continue. Hogs just cannot get going in the negotiated market. Although fourth quarter hogs are probably undervalued here, we just can't get anything to spur the cash market. And without that cash market coming, I don't know that we can expect much out of the futures either.
When we see that pressure on these packers, they're talking about operating at a loss. Obviously, you said they're not going to be putting that much money in. I mean, is that going to be, we've been looking for what's going to be that catalyst that gets producers having to produce more steers again and produce more heifers to keep more heifers back to breed. Could that be part of that catalyst? If they're not able to pay as much, that they're not going to be buying it, they're going to have to start producing more cattle to make up that difference.
Absolutely. And I don't know, it's kind of a catch-22 for them as well. I had a client pose the question the other day, well, why don't the packers just kill demand? Because they have the ability to price that beef at wherever they want to price it. If they price it too high, that'll kill demand, and they don't have to buy as many cattle. However, if the beef price starts ratcheting up, then the cattle market comes with it. And so it's all interconnected, and at the end of the day, it's all to service the consumer, which is the beef. And if the pieces don't work right, something's going to give, and I don't know what the timing of that could be, but this is definitely something that could be the push to really initiate some substantial heifer retention as we move through the next 6 months or so.
And I was thinking the optics of a big multi-billion-dollar company like Tyson or all these, raising up prices to price out the market isn't going to look well to the consumer at this time in the economy either.
No, that's exactly right, especially when food inflation is one of our primary concerns, in addition to gas prices is the biggest one. But, these are the two things that every consumer is looking at, gas prices and food prices.
All right, Eric, well, thanks for the insight. If folks want to look at some of the information that you guys have at CommStock, what's the best way for them to find that?
You can find us on all social media outlets. You can go to the CommStock channel on YouTube. You can go to our website at CommStock.com or just give us a call, 712-227-1110.
All right, Eric Relph's been with us from CommStock Investments. Thanks so much. We'll talk to you again real soon.
Sounds great.
Let's go ahead and take a look at the numbers right now. September corn is down 4 1/4 at 452 3/4. December new crop down 4 1/4 at 476 1/2. September beans up 3/4 at 11.66 even. November up 1/4 cent at 11.83 1/2. Soybean meal up $1.60 at 3.10.10. Soy oil 23 cents lower, 68.93. Chicago wheat 6 3/4 cents higher at 6.59 1/2. Kansas winter wheat up 11 1/2 at 7.32 1/4. Kansas spring wheat up 21 1/2 at 6.82 1/2. Minneapolis spring wheat up 7 1/4 at 6.80 1/4. Oats down 2 1/4 at 3.21. On the Merc live cattle down $1.70 at 228.87. Feeders down 2.30 at 344.05. Lean hogs down $1.22 at 82.32. Pork cutouts unchanged at 107.27. Class 3 milk is trading down a nickel at 16.60. Thanks again to Eric Relph of CommStock Investments for joining us here on the Opening Market Podcast. I'm Dustin Huffman on the Iowa Agribusiness Radio Network, where Iowa Ag matters.